So if you invested in gold at the start of 2024, you would have gained 26%. That was an even higher return than the S&P 500. And it doesn't seem to be stopping there, as gold has continued to reach new all-time highs this year, gaining another 8%. This week, I'm very happy to be joined by Dean Cook, who's a portfolio manager on our multi-asset funds. He's going to give his insights on why investors are flocking to gold and whether this demand can continue going forward. So Dean, thanks for joining me. I'm sure the people watching will know the reasons why people generally buy gold. So that's for jewelry and for use in electronics. Why do people invest in gold?
Thanks very much, Luke. I guess gold is generally thought of as a store of value, and it has been for thousands of years. It's considered a good hedge against inflation because there's a limited amount of it out there, and it can be used as a means of exchange, i.e. money. Gold is also considered to be a safe haven asset, so investors turn to it during periods of uncertainty. Maybe because you can touch it, it provides reassurance, but if you're also worried about paper currencies, which is the environment that the world operates in, maybe because of inflation or political risk, then it can be a useful sort of last resort. In a portfolio context, finally, gold also offers diversification benefits. It has lower correlations, i.e. sort of responsiveness to the movements of stocks and bonds. That's one of the reasons why we own gold in some of our multi-asset portfolios.
Okay, so that makes sense as to why people invest in gold. But what's been driving this recent surge in price?
Well, it's not jewellery demand. That's actually at its lowest level since 1989. Investor demand has picked up. That rose 25% last year. Geopolitical concerns were undoubtedly a big factor. So there was the ongoing conflict between Ukraine and Russia, as well as war in the Middle East. That would be speaking to gold's safe haven reputation. Similarly, concerns around President Trump's proposed policies have potentially added to this. And then finally, there's been a significant increase in demand from central banks. So for context, over the past 3 years, central banks have bought more than 1,000 tons of gold each year. And in fact, these have been the 3 highest years of gold demand from central banks on record.
So just on the central bank purchases, I saw the share of gold holdings across countries' currency reserves is now at 10%. And that's up from 3% a decade ago. So what's the story here?
Yeah, that's a big change, and imagine how much that is in monetary terms. So gold has been an essential part of a country's financial reserves for centuries, mostly to diversify holdings of the major currencies that a country trades in. The recent increase in central bank demand was broadly triggered by the US sanctions on Russia in 2022, as other countries diversified away against the US dollar, so potentially trying to protect themselves from future sanctions. For the past 3 years, the share of total gold demand represented by central banks has doubled from an average of 10% from 2010 to 2021 to an average of 21% since 2022. In terms of which central banks are buying gold, so emerging market countries are broadly leading the charge. You've got Poland, India, Turkey, and China, all the biggest buyers of gold in 2024.
Okay, so from what you said, it seems like both investors and central banks can't get enough of gold at the minute. Is this something we should expect to see going forward?
So the trend of higher fiscal spending across developed market economies is a supportive structural factor. The UK unveiled one of the largest non-crisis budgets ever in October of last year. Meanwhile, in the US, federal deficits under President Trump are expected to average around 9% of GDP over the last 3 years. That is much higher than the long-term average of 3.1%. This can put pressure on the value of currencies. And so when investors are concerned about the potential devaluation of their cash, they find other places to put it. And gold is a natural beneficiary of that type of concern. Similarly, President Trump's America First agenda and trade policies may actually increase the appeal of diversifying those dollar reserves if you're a central bank with gold. So whilst it's debatable if gold can match last year's performance, there's certainly reasons to be constructive in 2025 and beyond.
Thanks, Dean. So it sounds like geopolitics and central bank demand have helped drive this incredible run gold has been on, and that we're seeing factors which could potentially help sustain this demand for gold throughout the rest of the year. Anyway, thanks everyone for watching. Please join us again next week for another topic which has caught our eye.